Okay, so I'd like to start out the presentation with this first slide. So if ever there's a straw that broke the camel's back, it was really the it's really the COVID-19 outbreak, the intensification of it. Okay, so you can see how, hold on. You can see how, for example, it all started in December with China alerting the World Health Organization of the unusual pneumonia in Wuhan. And then, the first time that COVID-19, became a crisis in China, actually, when they started to quarantine cities in Hubei, and, the travel advisories against China, our market wasn't doing so bad. We just lost a little bit. Even when the World Health Organization declared it a global emergency, I mean, not so bad. See, we're still at 7,300. I think what really triggered the sell-off in the Philippine market was around February 24. Um, like a week earlier, around February 21, February 22, infections were growing exponentially in South Korea, and then there were infections in Italy and in Iran. I mean, the number of infections there were growing really rapidly, and because of that, the US market fell by 3%, S&P 500. And that was what caused the Philippine market and actually global markets to go down in a tailspin. And in March 11, finally, the World Health Organization declared COVID-19 outbreak as a global pandemic. And as of yesterday, the PSEI closed at 4,623.42. Really scary times for the year-to-date period. We're actually down by 40% already. So, the bad news is looks like things are going to get worse before it gets better. Right now, the infections have yet to peak. So the number of new cases, as you can see, as of yesterday, still up exponentially at 26,110. If we take out China, you can see that we're still at an exponential phase, actually. So the problem right now is actually outside of China and not in China anymore. And it's really, um, still growing exponentially, which is why it's still scary. We don't know when it's going to end. And the economic impact of COVID-19 outbreak is going to be severe. How will it impact the economy? First of all, there will be less consumer spending, less investment spending because of travel bans, business closures because of the lockdowns happening, right, like what's happening right now in the Philippines. And a lot of jobs will be lost, so people cannot spend. And of course, we have our supply chain disruptions. Now, there are so many forecasts out there as to what will happen to GDP, but in all honesty, I think everybody's just guessing. So just to put things into context, I think China would be the best example. For the first 2 months of the year, you can see how the fixed assets investments have dropped 24.5%, industrial output down 13.5%, retail sales down 20.5%, and these numbers have exceeded the consensus forecast by a lot. So in other words, if somebody tells you, oh, I think it's the economy will grow like this, grow like that, drop by this, nobody knows. People are just guessing. And an unemployment rate of 6.2% is highest on record. Okay, so it's gonna be bad. And I think one of the things that I'd like to share with you right now, which a lot of people are, not so much aware, is that liquidity conditions globally are also tightening. For example, I just want to highlight how gold is considered to be a safe haven. But if you look at gold right now, you will see that, well, it's not acting like a safe haven because it has also gone down significantly after initially rising during January and February when people were looking for a safe place to put their money in light of what's going on globally. It's actually now down quite a bit from its high of around $157. And high yield bond spreads. Okay, this is the spread of say junk bonds or lower rated bonds relative to the treasuries in the US. So usually when there's a crisis, notice for example in 2002 when the dot-com bubble burst, syempre yung access to credit ng mga less desirable borrowers, it jumped all the way to 10.14% above the yields of say US Treasury, like the 10-year bond rate. So maybe, for example, if the 10-year bond rate right now is 1.5%, the junk borrower would have to pay 11.2% in the US. During the global financial crisis, this number climbed up to 18.3%. And right now, we're at 9.7%. So nagkakaroon din itong tightening of liquidity. So even if you buy bonds right now, it's not a safe haven. Okay, so difficult time. So what's happening right now is prices of all financial assets are falling. It's not only stocks, not only Philippines, it's the US, even bonds. Bond spreads are widening. And why is this happening? First, there's the negative economic impact of COVID-19. Syempre, pag nagpautang ka sa company, they're in a worse position to pay the borrowers. And secondly, and I think this one, not a lot of people realize, but I've been interviewed and I talk about this, which, in some ways it seems kind of silly, but that's just how it is. There's what we call forced liquidation. So what happens? First of all, prices of stocks go down because people are afraid. And when people are afraid, there will be more sellers than buyers, which is obvious, di ba? Ang problem is there's what you call the margin call because not everybody who buy stocks using cash. They also borrow money. And when you borrow money, 'di ba may triggers 'yan that you can only borrow up to a certain percentage of your equity. So, pag biglang lumaki yung lugi mo, there will be what you call a margin call. And if you cannot fund those losses with cash, the broker will be forced to sell your positions. And that's why you call it a forced liquidation. You don't have a choice but to sell. And then you also have the growing popularity of algorithmic trading. So given how fast the market has gone down and how steeply it has gone, algorithmic trading says like as long as certain thresholds are triggered, they automatically sell. No questions asked. Sell agad yan. So that one makes it even harder. And another thing that happens during difficult market conditions is increased fund redemptions. Kasi natatakot ang investors, tatawag sila sa mga brokers nila, sa mga fund managers, and they're gonna say, I want to sell my equity fund, I want to sell my bond fund, I want to get my cash now. And that aggravates the situation. So what this means is higher bankruptcy risk for highly leveraged financial institutions. And if you are a company that needs to refinance your debts, let's say may maturities ka due, it will be very difficult for you to refinance your debts right now, assuming it's a big amount, no? So that's another problem that is happening. Kasi a lot of people are wondering, wala namang problema yung liquidity ng company or sorry, wala namang problema yung fundamentals. Maganda naman yung earnings. Kahit pa magka-COVID-19, okay pa rin yan. Bakit yung share price down 30%, down 40%? So essentially, this is happening. Another part of it is also because, um, you know, there's a forced liquidation going on right now globally, and this is causing prices to go down. Okay, but that said, the silver lining that I'd like to share with you that our initial projection that the outbreak will only be temporary still holds. Um, I remember writing about comparing COVID-19 to SARS, and SARS in 2003 ended in July, and looks like that is still going to be the case, or at least based on what we see, no? Because first, China and South Korea have already seen the worst, and governments are taking the right steps to address the problem. least in my opinion. So let me just share the first one. China actually has already seen the worst. Okay, if you can look at this table here, the number of daily new cases in China peaked at February 13. Okay, and the number of um, newly infected versus newly recovered in China, um, so the number of new recoveries versus new cases crossed paths, or we will call this the golden cross because it's a bullish development. So in other words, if this happens, you'll have a peaking of the number of new cases. It happened in February 18. So I'll show you the next chart. Okay, so you can see how the number of active cases peaked at February 18 here. Okay, so what's the timeline? January 23, Wuhan and other cities in Hubei were locked down. Um, so February 13, the new cases peaked. And a few days later, we saw the Golden Cross Day. Okay? So we define the Golden Cross Day as new recoveries exceeding new cases, which leads to the peaking of active cases here. Okay. And finally, March 13, Apple opens all 42 stores in China. So the reason why I added March 13 and the opening of Apple stores is because the skeptics will say, yung China naman, ano yan eh, di ba? Di naman mapapaniwalaan yung numero niyan. Fake, whatever. But if Apple which is a private company, decides to finally open its stores after closing it in February, that means that probably on the ground, things are really improving. Kumbaga, nung time ng global financial crisis, we call this the green shoots of recovery. Meron na. Parang it's starting to look like spring again after a harsh winter. So for me, that's a very important date, okay? And South Korea, mas bago ang Korea, but we saw how on March 3, there was a peaking in the number of cases. And on March 13, they also enjoyed their Golden Cross Day, or where the newly recovered exceeded the newly infected people. So, yun. And then the timeline, okay, so on I think the important date would be Feb 20, when they realized that the number of infections were growing exponentially. Um, Natakot na yung mga residents. They practiced self-quarantine, and the government began mass testing for infection. So this is what's different. Whereas China quarantined the whole city, and a lot of countries like essentially banned Chinese travelers. What South Korea did was they just tested anybody and everybody. They're the most aggressive country in terms of testing for um, COVID-19 infections, which actually was a very good practice. So finally, March 3, new cases peaked. March 13 was the Golden Cross Day. Now, I know that yesterday, I think biglang nag-shoot up ulit yung number of cases because there was a shelter for old people na they had like a massive infection there. But then again, comparing it to the peak number of cases, it's still below. That's why I still think that at least, the worst is over. Baka lang medyo matagalan going to the normalization stage or the green shoots stage. Okay? So anyway, the reason why I think that July is still a good timeline for us is because right now the governments are taking the right steps to address the problem. First of all, despite initial denials and resistance, increasingly countries and governments are implementing lockdowns, quarantining measures. Okay, so all over the world, you'll see countries closing schools, prohibiting mass gatherings, closing borders. Okay? So, yung iba nga, 'di ba dati, pwede pang magsimba, ngayon bawal nang magsimba. Kasi yung iba sinasabi, pag nagsimba ka, gagaling ka. Pero ngayon, pinagbawalan na rin nila yon. So, bawal nang kumain sa restaurant, bawal ng dine-in, bawal mag-attend ng concert. So, it's not only in the Philippines, it's all over the world. You can go do a search online. You can't even count with your fingers anymore the number of countries that are doing this. Second, you have countries finally right now, again, initially, they were um, not working on increasing the availability of testing kits. May politics pa involved. But now, they're inviting the private sector to actually develop more testing kits. I mean, I thought these testing kits were easily available. Apparently, it's not. It's a very complicated process. If you read the papers nga, ang sabi nga ni DOH, these testing kits are not like pregnancy test kits. You can't just buy it off the shelf and you put a little blood or put a little urine and then you'll find out if you're positive or negative. It's a complicated thing. So, well, they're working on making it more available so more people can have tests and will do better quarantining in light of that. And of course, a lot of companies are searching for vaccines to address the problem. Finally, the central banks are aggressively boosting liquidity. I think, you know, during the Asian financial crisis, I remember the Philippines, dati pag may problema ka, it's unheard of to cut interest rates. Pag may problema ka, pataas ang rates mo. So, for example, in the Philippines, the IMF lent money to us, but they lent it at a very high rate. And we just had to swallow it because that was how problems were addressed before. Same thing happened in the 1921 Great Depression. The US also had to, or the Fed during that time, raised rates dramatically because they felt like they were addressing a bubble. And of course, since they didn't want the bubble to continue growing, they had to burst it by raising rates. But now, I think the global central banks understand that there is a massive liquidity problem going on, and companies with no problems are going to become bankrupt or at risk of, at being bankrupt. So aggressively, they're doing this to increase liquidity. For example, the Fed has cut its rates to zero. So for this year, it has reduced rates by 150 basis points. So that's a lot. Lahat ng tinaas niya the past few years, sinoli na niya ulit. Tapos they resumed the quantitative easing or the buyback of bonds in the markets. Okay, 700 billion US dollars. I think they're also doing some 2 trillion in repos. So parang stealth QE nga tawag nila dyan. The European Central Bank is also engaging in quantitative easing. 750 billion euros is the budget, but I think they'll do even more if they need to. Our very own central bank has cut rates yesterday by 50 basis points after initially cutting it by 25 already. So they'll keep it low for as long as needed. They need to do it. And finally, there's fiscal stimulus going on. So for the US, right now, they're doing a 1 trillion US dollar stimulus. And part of this is giving each adult a paycheck of $1,200 and each child $500. So the details, they're now threshing it out. For the Philippines, it's 27 billion pesos. So essentially, around the world, people are, or the governments are finding ways to stimulate the economy because they know we're going to fall into a recession because of the COVID-19. Okay, so what is a possible scenario of the Philippines based on the timeline of China and South Korea? I mean, if we were to follow what's going on there and the number of days by which um, it took them to hit the peaking of new cases, the Golden Cross Day, or the peaking of the number of active cases, and the normalization of conditions, the green shoots nga, bumabalik na. So if that were the case, then maybe by the time that our quarantine is lifted, which is mga after Holy Week, no, April 14, 15, we'll probably have our Golden Cross Day already, which is good news. I don't know if the quarantine will indeed be lifted but by around early May, hopefully it really will be lifted, because if we do this quarantining right, then the number of cases should fall in a convincing manner, allowing the governments to, let things slowly go back to normal for our country. Okay, so what about stocks? Going back to stocks, just one thing I want to highlight at 4,600. I mean, when we started the year, we were already saying that stocks are cheap. But right now, just want to say that it's a lot cheaper. Usually I would use a 5-year PE band, but now I'm using a 10-year. And you can see, compared to the past 10 years, we've never been cheaper, the PSEI. So just to put things into context, because I know there are some skeptics, sasabihin nyo, oh, mababa siya, pero yung EPS nyo, bababa rin. Let me just put things into context. Okay, so PSEI, our index is now down 49% from the peak of 9,078. During the global financial crisis in 2008, we bottomed after falling by 56%. So I did the numbers. If we were to fall by 56% from the peak, um, we would have to hit 4,000. So maybe in January, if you said when we were at 7.8, parang it's impossible for the PACI to hit 4,000. Pero as of today, it looks like it is a real possibility, di ba? So it may happen soon if we were to follow the global financial crisis condition, and fall by 56%. Konti na lang, malapit na tayo dyan. Secondly, at the current price, the implied drop in earnings is at least 38%. Okay. And what is 38%? Conservative ba yun or aggressive? My feeling is it is um, quite aggressive in the sense that EPS fell by only 27% during the global financial crisis. So may buffer ka na dito, margin of error. Um, and at the said level, it's the implied EPS of the index is returning to 2010, 2011 level. So I guess you ask yourself the question, once this crisis is over, are we going to be worse off than we were 10 years, 9 to 10 years ago? If you think the answer is yes, then by all means, continue to avoid the market. If you feel like when things normalize, definitely will be better than 9 or 10 years ago, then I think you should actually keep an eye on the market and consider starting to invest. Okay, and yun na nga, 9 times PE, we hit a low of 11 times PE during the global financial crisis. And finally, all stocks now trading below 10-year historical average PEs. So when I was doing the presentation on the market outlook this January, I said like maybe 80% of the stocks were trading below their 10-year historical average PEs. But now, even the likes of SM Prime, URC, yung mga favorites ng mga investors, even BDO, they're all trading below their 10-year historical average PE. So lahat ng stocks mura, lahat ng stocks very tempting at this stage. And why am I, positive, or what is the reason why, we shouldn't be too negative at least? First of all, there's no systemic risk. I personally think that the COVID-19 crisis is not as bad as the global financial crisis because at the time, there was massive leverage, which meant a lot of non-performing loans, especially in the US, because people were borrowing a lot of money and using mga all these derivative products, leverage, etc. And that's a problem that takes a very long time to address. And secondly, banks, global central banks are aggressively boosting liquidity. So the first time, I remember in 2008 when, here in the office we were talking about Ben Bernanke at the time. He was called Helicopter Bernanke because he was just flooding the whole system with a lot of money, and it was unprecedented, uncalled for. We felt like, I think this could be the wrong solution to the problem because nung time na yon, sanay kami, kung may problema, unahan mo na, hayaan mo nang mabankrupt yung mga bangko, and then those rich people with a lot of money would buy them at a very cheap price. Tapos na ang problema, di ba? But, um, you know, the Fed did the bailout by boosting liquidity, and now it seems to be what a lot of people are doing, So it's an accepted practice already, and global central banks are doing it. So I think at least that will help companies recover right now. Okay. So that said, what is the strategy for you as an investor? Again, we already said this during January. So I think that you should stay invested. Let's say may hawak ka pa ngayon, tapos nakita mo, grabe, down na naman ng 40% since January. Ano bang gagawin ko? Bebenta ko pa ba to? Parang nakakatakot, ang daming problema. But I'm just saying, given how cheap prices are and the strong likelihood that we'll recover, and given that the problem is not going to be a long-lived problem, I think we should still stay invested. But at the same time, um, manage your risk, because again, we're just guessing that this will be a short-term problem, but um, it could go down some more. Things could get worse before it gets better, and the markets might not recover as fast, even though conditions are already improving. So, when you buy stocks today, have a long-term perspective. Diversify, don't just buy one stock, buy several stocks, focus on blue chips, because most likely when they go up, when the market goes up, the blue chips will be the ones to go up first. And finally, limit your size to an amount that you can hold on to for a long period of time. Don't buy too much na you're not comfortable with. Okay, so in summary, the ongoing COVID-19 crisis is scary, as things are expected to get worse before they get better, and the economic impact is expected to be severe. However, similar to SARS in 2003, we think there's a strong likelihood that the crisis will be over by July or the second half of the year, creating an opportunity for long-term investors to buy stocks at bargain prices. China and South Korea have already seen the worst after practicing quarantining and massive testing. And governments around the world are slowly practicing these as well. And global central banks are also aggressively boosting liquidity to address possible liquidity problems. Valuations of stocks are pricing in a scenario that is worse than the global financial crisis, even though our current situation is not as bad, at least in our opinion. However, because nobody knows when and at what level the market will bottom, we would like to stress the importance of having a long-term perspective and managing risk through diversification and proper asset allocation. So just some closing thoughts, which I also shared during the market outlook this January. No price is too low for a bear or too high for a bull. So prices are going down right now. Um, I recognize that prices or stocks are cheap, but I don't know if it will become cheaper. Okay. And next, what Warren Buffett has said: be fearful when others are greedy, and greedy when others are fearful. And we know now is the time to be greedy because everybody's afraid. And the stock market is a device for transferring money from the impatient to the patient. So patience is definitely a virtue during these difficult times. So with that, thank you very much, and I'm open to your questions.